Hello everyone, it is the Canadian Futures Trader here, and in this video we're going to be talking about the different trading evaluations and basically what is your actual real buying power. You know, when you sign up for that account it says get $50,000 buying power. Do you actually get $50,000 of buying power? Or another way to think about it, what is the actual real value of your account? So we're going to kind of go through that and my way of thinking about it. And then lastly, towards the end, I'm going to talk a bit more about it. Are the evaluations worth it? So learning what we learn about the real buying power of an account, what do we think about the evaluations? Are they good? Are they bad? So just to kind of set the framework here, I just put up OneUp and TopStep. I mean, there's obviously other evaluation companies. They're all fairly similar. I think we can agree on that. So I'll just zoom in here on OneUp, for example, and I'm just going to use the 50K evaluations as kind of the talking point through this. I mean, the same information applies whether it's 100K, 150K, a 25K, etc. So with OneUp, some of the important numbers here. $50,000 account. You get to trade up to 6 contracts. We're not so much worried about the profit goal. The trailing drawdown is 2,500. So basically, if you lose more than 2,500, you're going to fail. And this one costs $150. TopStep, similar, 50K buying power, even says it right here, costs $15 more per month. I cut off what the labels are for this, but this is your profit goal, number of contracts, so you get one less contract. This is your daily and weekly stop losses, and this is your total trailing drawdown is 2,000. So a little bit tighter drawdown on this one less contract, and slightly costs more, but overall similar stats. So we'll use 50K as an example, and I think I use 6 contracts as the example, so we'll pretty much focus on the OneUp kind of stats, if you will, for our comparisons. So do you actually have $50,000? And the short answer, first bullet point there, is no. The $50,000, the 100, the 150, whatever, is really just a marketing tactic. It's not like when you sign up, with say OneUp, they open up an account for you and put $50,000 in there. It just doesn't happen that way. And I mean, that might sound obvious to some people who've been in the combines for a while, but I think when people are new to it, they actually think, that's what's happening. You're signing up, you pay your $150, and you get an account with $50,000 in it. And that's not really what's happening. So why do they frame it that way? I mean, it sounds good. A lot of it is just marketing. Pass this test, get $50,000 in buying power in a real account. It sounds appealing, right? People hear that. They think, yes. I mean, I can speak from my own experience. When I first started, found out about these funding companies, it was a year ago. It's funny, it's almost a year ago to the day almost. It was about February 15th, I want to say, when I signed up with TopStep for the very first time in a 50K account. And yeah, I was like, oh wow, like you just sign up, you pay the $165 with TopStep, you trade and you get a $50,000 account. Like, those numbers look terrific. The reality is, though, you're trading on margin, and we're going to get into some of those numbers. So you kind of have 50K in buying power. So let's dig in a little bit here to what's going on. So consider this. So before we go through the points, this is from OneUp. This is the permitted products, and we don't need to go through all of them. It's the same for pretty much all the different evaluation companies. I think we're all pretty familiar with them. So there's about 50 different products that you can trade. Now, each of these products has a vastly different margin requirement usually. And when I say usually, I mean kind of I refer to it as the real world. I mean, if you had your own account that you open, and we're going to talk about those in a little bit, and that comes into play when comparing these. So if I just go to a brokerage and open an account, the margins for, the Ultra Bond are far different than the margins for ES, and they're different than the margins for crude oil. So if you actually had just $50,000 account, the number of contracts you could trade should be different. If I'm trading ES, which has a lower margin requirement than, say, the Ultra Bond, I should actually be able to trade more contracts of ES than I do Ultra Bond. But with these trading combines, it's just 6 contracts, for example, with OneUp. So there's kind of your first indication that not all it's, you don't actually have $50,000, or the number of contracts should change, and they don't. You just get 6 contracts. So let's look at next. So what is the real buying power of an account? So comparing the real world, i.e. if you just went and opened your own account with a broker, we're going to look at that on the next slide. So the margins vary by broker, and they vary by product. So the margin for ES is different than crude, is different than the Ultra Bond. is different than NQ, etc. The list goes on. And the margins vary broker to broker, and I show what 4 different brokers are, and you'll see how drastically different they can be. One side comment about this, so overnight margins are much higher. Sometimes they're double, sometimes they're 4 times the amount. It just depends. We're going to focus on what they call the intraday margin. That means you can only, open and close a position in the same trading day, and that's the same as the rules of the various trading evaluations. So that's comparing apples and apples. So when I list out the margin requirements for a couple different brokerages, it's the intraday margin, meaning you would have to close your positions before the trading day closes. Okay, so let's spend a little bit of time here. So these are the current intraday margins as of February 2021. They do change depending on market volatility, etc. There is links down in the video description to each of these 4 brokerages directly to their margin requirements. So you can click on that link and actually see these numbers or any other products that you're interested in. So what I've done is I've listed 6 different products here. I feel like ES is what most people trade, and we'll probably use that as the example in this video. NQ, and then I listed some of the ones that I like trading. Crude oil, ultra bond, 30-year bond, and then I put gold just as an example of a higher one because it was one of the highest ones. As far as brokerages, I chose these 4 brokerages for a couple of reasons. One, NinjaTrade brokerage and Tradeovate, I actually have my own accounts at. Part of why I opened with these 2 brokerages is, 1, they have good reputations. 2, they have the lower margins. NinjaTrade brokerage really, after doing my research, all in all, they really have the lowest margin requirements. AMP, perfectly good brokerage. I had already had accounts at these 2. You see these numbers are somewhat similar. And then number 4, big jump, Interactive Brokers. I have it abbreviated here. We're going to do an example later with Interactive Brokers, but let's just look at this. So for example, the ES, the E-mini S&P. What this means is, what this $500 even is, if you're not familiar what this is, that means that if you wanted to trade 1 contract of ES, you would need to put up margin of $500. You would need to have $500 in your account to basically represent that contract. So in order to trade it, you would actually need a little bit more than just $500, because what if you lose money on your first trade? Well, now you don't have enough to even trade 1 lot. So but basically, just think of this as, to trade 1 lot, you need $500, and that's going to be kind of set aside while you're in your trade. Tradeovate, it's similar, $550. AMP is a little bit less, $400. And then Interactive Brokers, $9,662. Huge jump. I almost hit the floor. The first time I looked at the margins for Interactive Brokers, I thought, I must be looking at the wrong numbers, and I wasn't. They are this high for Interactive Brokers. So obviously, don't recommend them as a broker if you are into futures contracts. So you can look at a few more. I do focus on NinjaTrade through the rest of the video, and the reason is because they're the lowest, and 2, this is basically the entire range. Basically, their lowest is 500, their highest is 2,000. Not just for gold, other ones as well. The one exclusion is when you trade the micros, then the margin is $50 instead of $500. But for most products, it's going to be $500 to $2,000. Tradeovate's pretty reasonable as well. They get a little bit higher. Some of these, like the Ultra Bond, which I like trading, is actually kind of high on them. And then AMP. So that is that. You can always come back and pause this or use those links below to check these out. So using NinjaTrade as an example, now let's actually compare. If you were to open a NinjaTrade brokerage relative to just trading a 50K evaluation. So if you traded 6 contracts with NinjaTrade, it's $500 margin. We just saw that. So that means you would need $3,000 margin. You need $3,000 in your account to cover the margin for those contracts while you're in the trade. Now you need an additional buffer, right? Think of that. I like to think of that as your drawdown. What's the most you could lose before you'd have to get out of the trade, because you can't obviously lose more than, and get yourself less than $3,000. So I'm going to say an additional $2,000, and that's similar to the trailing drawdowns, right, for the evaluations. So you would need a $5,000 USD account with NinjaTrade brokerage, and you could trade 6 ES contracts intraday, have a $2,000 drawdown before violating a margin rule. And they do charge you, just so you know how it works. And I found this out the hard way, unfortunately, is if you violate this, if you go below, they charge you a fee for violating margin rule. So basically, if you put up $5,000, you could trade 6 contracts. That's far less than $50,000, right? So what's the $50,000 about? OneUp Trader, so the math. So I kind of took a different approach here and basically said, okay, well, what is OneUp effectively, or OneUp or TopStep or whoever, but I'm using OneUp's numbers here, effectively charging you for margin, knowing that. So if you had a 50K account, you can trade 6 contracts. There's a $2,500 drawdown. You can afford to lose that much before you liquidate it. So that means you basically are putting up margin of 47,500. Divide it by 6 contracts. They're effectively charging you $7,917, rounded up to $8,000 margin per contract. So way out of line with, say, NinjaTrader, AMP, etc. This is more like interactive brokers types of numbers. So is the $8,000 I rounded up margin out of line? Well, compared to interactive brokers, not at all. I put the same thing back here. If you wanted to trade the ES, you would have to put up $9,662 margin. So, the 50K combine actually makes sense. Like, yes, you do have $50,000 worth of buying power based on, say, an interactive broker's numbers. But who, looking at these options, who would actually open or use interactive brokers, unless you have a good reason to. I know some people use them for other investment purposes, but most people are just going to go open an account in Intraday or TradeAvate, etc. So compared to the other three, yeah, that's a little bit out of line. So with that in mind, why would anyone want to trade with OneUp, TopStep, Earn2Trade, LeeLoo? You could trade 6 contracts like we just showed with Intraday for $5,000, where instead of, you don't need a in quotes $50,000 account. Well, the thing is leverage, because remember, you're only paying $150 for a 50K account. 50K, in name, we'll say. You're only paying $150. You're not putting up $5,000. You're not putting up $50,000. You're putting up $150 for the right to do that. So instead of putting up $5,000 with Ninja Trade Brokerage, you're putting up $150 with, TopStep, OneUp, whoever it is, give or take a few dollars. And if you pass, you get the buying power, of having 6 contracts. So the big catch, you need to actually pass. And let's go on and talk about that a little bit more. So the classic argument are these trading evaluations a scam or not a scam? So every few months on the different trading message boards, Earn2Trade and Futures.io are the 2 main ones. I see this argument more on Elite Trader, not Earn2Trade, Elite Trader and Futures.io. You see the argument. It usually breaks out, and it's pretty polar opposites. People either completely hate these trading companies or they're 100% for them. So first of all, I would never call them a scam. I mean, a scam implies that, they take your money and you get absolutely nothing for it. They aren't a scam. I can attest to that myself. You've seen my videos. If you pass, if you follow the rules, you get a funded account, you can make real money. So there's no scam. They're difficult to pass. And I think that's where people, they like to go off on a tangent and on a rant, say these companies are scam, they're just taking all your money, you'll never get funded. That's not really true. They're difficult to pass is really what's happening. Trading evaluation companies make no promises in terms of how easy it is. They do make promises like, if you pass, you get a funded account, and that's completely true. But I've never once seen any of these companies say anything like 97% of our, people who take, the evaluation pass or anything. Like, they don't put any percentage on it, and they don't say like, oh, most of you will pass. Nothing like that. So they're really not making any fake promises in terms of how many people pass. If in fact, I would guess, and this is my complete guess just based on what I've seen on the various forums over the last year, people talking about signing up and then busting, etc. I'd say definitely less than 10 people, pass and keep a funded account. And it might even be lower than that. I would not be surprised if it was 5%. Now, these companies don't put out those numbers because they're not going to be that attractive, right? If people knew like, hey, only 5% of the people that take these evaluations actually pass and keep a funded account, that makes it far less attractive. So we'll probably never learn the actual numbers, but I suspect they're fairly low. So people against argue that no one passes the first time through, so part of it is based on, like I made the comment, like you pay $150, you go through, you pass, you get a funded account. Well, people argue, well, nobody passes the first time through, or most people don't pass. It takes them several months. They have to pay for several resets. They end up pumping in far more than $150. Maybe they put in $500, maybe they put in $1,000, maybe they put in $5,000. And it gets to the point where, you could have put that $5,000 into an actual just trading account. So you kind of have to weigh that argument. Are you going to be the person who puts a lot of money through these evaluation companies but never really does actually get anything out of it? Or are you going to, maybe you don't pass your very first go, but you kind of learn and you build up and you actually do pass. So my verdict, what's my opinion? I'm very much on the side that all these trading evaluation companies are a great opportunity, but you have to be a little bit level-headed about it. So there's a few good reasons why I like them. So one, you might sign up, you sign up for OneUp, you're excited to trade futures, and you find out you just don't like trading futures. You don't like the time that's involved, the hours that's involved. It's not as exciting. Maybe you'd prefer to trade Forex, maybe you prefer trading stocks. It's not all it's cracked up to be. You don't, win a Lamborghini. I shouldn't say win, but, earn a Lamborghini in your first week. So you're like, you know what, I didn't really like this. So, hey, you're only out $150. No big deal compared to if you had to go sign up for NinjaTrade, send in all the verification documents, send in your initial deposit, etc. Far easier to just pay the $150, give futures trading a try. Hey, it's not for you. You move on. It's also a learning opportunity. Even if you pay for multiple months and several resets, it's likely you're going to pay less than 5K. And we're using 5K as that example for 6 contracts of ES. Other things. So I wrote here the Ultra Bond. If you use the margin requirements for Ultra Bond, which I like trading the Ultra Bond, I would actually have to put up about $8,000 to trade the Ultra Bond 6 contracts. So, it would be for someone just starting out. That's, again, it comes back to, I think it's a cheap way to test out and see if you like futures trading. Third point here, leverage a relatively small amount one time. If you pass the first go to trade contracts worth much more, you guys saw me. I passed, for example, OneUp. What did I pass? I passed the 100K account, which costs $300, I want to say, and I passed it my first time. So for a $300 fee, I got an account that has 12 contracts. Not too bad. So I actually wrote out a different example here. So using my latest evaluation that I'm going through, 250K combine, I get to trade 25 lots, and I like trading the Ultra Bond, so this is kind of personal to me. I would have to put up $25,000 margin because it's $1,000 margin with NinjaTrader. With Tradovate, without going back to that screen that has all the margins, I did the math. If I was to do the same with Tradovate, it was like a little over 4 times the amount. I would have to put up 109,000. Or if I was with Interactive Brokers, I want to trade 25 contracts, I would have to put up $289,000. Take a step back for a second. So instead of putting up, even using the lowest number here, $25,000 in margin, and that's just margin, instead I can pay the $650, go through the evaluation for 3 weeks, pass, and guess what? I get an account that I can trade 25 contracts with, all for that one-time fee of $650 instead of putting up $25,000. So yes, if you can get through the evaluations and actually pass, huge opportunity. And then I wrote there, it cost me $650 for 1 month's fees. And if you've seen my other video, I'm very much on track to actually pass. So in summary, is your buying power actually $50,000? Not really. Again, it's more of a marketing. It's a nice number. Hey, get a $50,000 account. A real value of a 50K account. Well, if you trade ES, the real value was about 5K. You could go trade the same number of contracts like we talked about in a real NinjaTrader account for about $5,000. If you want to trade gold or one of the other products that has like a 2K margin, it costs you about 14 grand, but still, not 50K. And again, that's using NinjaTrade. And then I wrote out the math here, 6 lots times the margin plus roughly a $2,000 drawdown. I mentioned as well, 500 to 2,000 is basically the range of intraday margins for NinjaTrader brokerage. And I'm not saying everyone go sign up for NinjaTrader brokerage. All I'm saying is out of the ones that I looked at, they by far had the lowest margins. The other companies are fully valid. Like I said, I have a Tradovate account as well, which I'm perfectly happy with. So, but NinjaTrader is definitely on the lower side for margins if you're looking at a real account. There's links in the video description to the brokerage margin requirements. So again, if you want to look at each of those, they do update them, I think, weekly, or if the market's complete turmoil like it was in early 2020, they actually update them pretty quickly. So are trader evaluations worth it? I say yes. So, some recommendations if you're new to the world of trader evaluations, pay a monthly fee, get a funded account. Don't get caught up in the hype. Don't get caught up in, I'm going to get rich trading futures in my spare time and, drive a Lamborghini. Like, that's really, you're going to be in for a bit of pain if that's your mindset. It definitely takes a lot of hard work, it takes a lot of discipline, lots of other stuff. Take it very serious. It is a great opportunity, but it's up to you to navigate the rules. And so, I often think about it. I mean, it very much is that analogy of like walking a tightrope or walking over like a very narrow bridge. Like, I mean, the goal is right there. You can see it. It's right in front of you, but you have to navigate very gingerly past like several rules to get there. So, and prove that you can do that in a disciplined and kind of timed manner. You can't just like run straight across the bridge, comparison being like just hitting a home run on day one and then doing nothing else. You need to kind of demonstrate that you can do this. I recommend having a plan, like know like when are you going to trade in terms of time of the day, what products appeal to you, what software you're going to use, what's your method, what are you using to choose what trades you go in and out of. Don't just jump in and start goofing around. Like, take it seriously, actually plan out what's your exit. Know before you get into each trade. I just speak from personal experience with this one. That is, if you know when going into a trade, you should know exactly when you will get out if things start to go south against you. When things go good, it's a no-brainer. I'm just managing the trade, I'm just in my stops, taking profits, whatever. When things start to move against you, that's when you really have to be careful. You don't want to be moving your stop like further and further away, and next thing you know, you're eating a loss that's twice as big as you originally planned. So for more kind of recommendations on what I think are kind of some good tips to pass these valuations, I made a video back in December. I'm going to put a link down below. Well, also, if you're watching on a computer, I'll have it pop up at the top of the screen right now. And I'll try to put it at the end of the video as well. Just my tips on best practices to get through the evaluations. I don't claim to be an expert, but I mean, I've passed OneUp, I've passed TopStep. I think I could at least tell you what I would recommend you do. If you're hesitant about trying these things, if you're like, you know what, either I don't want to spend the money, I don't know if trading's for me, I don't know how all the software works, whatever your kind of hang up might be, some of them, and I'm going to point you to OneUp, they have a free trial. OneUp has a 2-week free trial. Now, it doesn't count towards anything. Like it's basically like a complete sim account with no goal, no nothing. But you will get the experience of logging into Rhythmic, setting up the software. You can trade all these products, trading within the time frames that the futures markets are open. And after 2 weeks, or 1 week, whenever you're happy, if you actually wanted to sign up, you could at that point. Now, again, the trial account doesn't count whatsoever towards your progress. Like, this is completely just like a test account, a sandbox account to give things a try. Complete sim doesn't count towards funding. Just want to make that 100% clear. Link down below to that. And what you want to do is when you go to that link, scroll about halfway down the page and you'll see like a 14-day free trial. Click that, go through the sign up, and you'll be good to go. And I did that before. I did that with OneUp way back, long before I even actually signed up with them. I did the free trial. They had me set up within like an hour of signing up. I was good to go. So pretty handy. And that's basically it, guys. So hopefully you enjoyed the presentation. I don't know if I 100% completely explained it or made it clear, but I really wanted to kind of answer the question because, again, I see it asked either on the forums or just people ask me, like, do you actually get a $50,000 account? No, you don't get an account with $50,000 that you can do what you want with it. Do you get $50,000 worth of buying power? Depends on how you want to compare it to real world accounts. Compared to interactive brokers, then absolutely yes. Compared to an Intraday, then absolutely no. You only have about $5,000 in buying power. So, but it's a good opportunity because at the end of the day, just to summarize, you're paying a monthly fee. Hopefully you're only having to pay for 1 month, $150. And guess what? You trade away, you pass, you get an account that has 6 contracts available to you. So all for the low fee of one time $150, if you pass them that first month. So definitely recommend checking out the trader valuations if you've been thinking about it. And that is it, guys. So I will leave you with that, and I'll check out the links below for all the stuff I mentioned and anything else I think of. I'll throw down there as well. And I'll see you in the next video.